Hello everybody and welcome to the midweek market update from Smack the Markets for the 26th of June. So this week has been a very quiet week in the markets up until that is last night after the Fed speaker's statements, creating a bit of volatility in the markets and releasing some of that sort of pent-up momentum. So things are still fairly quiet out there. So let's go and take a look at how the markets are doing that we discussed on Monday, and the sort of opportunities that we're focusing on in the trading room throughout the remainder of the week. So if we come across first of all and take a look at the Dow Futures contract. Now on Monday the market was up here still around the sort of 26 sort of 700 level. We're looking for a retest of those highs and sort of pushing up towards that 27,000, but things were looking sort of really quite stretched, and our preference here was for some kind of retracement. Our sort of level was back here on the daily chart, back into 26,500. Now, the market has slipped back to 26,500, and after breaking a technical level on the intraday charts yesterday, pretty much sort of slipped straight back to that area. Now, it's just hovering around that price point at the moment. So technically speaking, on these charts, it's looking sort of quite interesting here. Certainly back into that area where I'm keen to be looking at long opportunities here. If we can get some longs to retest the 26 sort of 700 and even sort of pushing up for maybe that to a 27,000 level. So still liking this on the long side. If we come down to the lower time frames, you can see that we've got quite a sort of a nice decisive sort of consolidation sitting on top of this sort of level, sitting on top of a pivot point at the moment, and indications starting to look that we've got a bit of bullish momentum coming through with a bit of convergence here. So if we can get a sort of a break up here, there could be some opportunities getting positioned to again ride this up to that 26,800 and then 27,000. The other market that we discussed on Monday was oil, and we're looking at oil here in between, or for opportunities in between 58 and 60.50. Now, the market didn't move until last night's sort of oil news, and on the back of the sort of lower stocks, lower US oil stocks, that gave the market a bit of a breakthrough, this sort of 58 level here. So it's part way through. It's into that trading window now, and we're looking for opportunities to be able to get positioned in here. So retracements here on the 4-hour time frame, we can see nice technical level. If we can get in back into this sort of 58 area, or even the top end of this sort of 58, so up here around sort of 58 sort of 35, that would be very nice up here. But again, even looking at sort of 1-hour and 2-hour charts, sort of pulling back into those sort of value area zones. And if we come and have a look at these, I'll sort of show you what I mean. If we look at this on the 60-minute chart, you can see that we've got on the top end of this sort of consolidation, there's a pivot point. We've also got moving averages as well. So back into that value zone on the moving averages. So somewhere around here, looking for trading opportunities. The other market that we discussed on Monday was dollar yen. We're looking at shorts here on dollar yen. Now the market did actually roll over and trade down to the lows before actually retracing all the way back up. So at the moment, it's still it hasn't sort of rolled over exactly how we were looking for. We're looking at market lower opportunities here, lower than this 107 sort of 250 area, which is evident here on the sort of daily time frame. Now prices above there, it's not an area where I want to be getting positioned. Certainly if I can't get risk-free trading straight into that level again. So for me, I'm more looking for opportunities underneath this level, because this puts it into a new sort of trading window. Now, the sort of Fed statements last night, pouring a bit of cold water on the imminent, expected imminent rate cuts, have caused the dollar to strengthen, and that's what's caused this market to sort of push higher there. So this one might take a little bit more time for it to settle down I still think we might sort of get this rollover. I don't think this is this downtrend is finished, but we've got a bit of a retracement to deal with. On other markets, though, I think cable here, Great British Pound against the dollar, is looking rather interesting for new short opportunities. If we take a look at this from a higher perspective, the Great British Pound hasn't been able to glean an awful lot of strength from anywhere really at the moment, and it really has sort of suffered somewhat. On these weekly charts, you can see that the market sort of had a good week last week. It's tried to sort of rally up and get past and retest that 128 level. It managed to sort of kind of come within a whisker of it, but then it's failing miserably off that sort of price point. So if higher prices are, if the market's struggling for higher prices, then there is sort of one way for it to go. If we come to the daily chart here, you can see the sort of price action in a bit more detail. 127 sort of 600 has been another key structure point on this market, and also 127. So we can see the rejection here. It couldn't really hold, it couldn't even close above 127 600. With now markets rolled over below 127, and with the market breaking below yesterday's candle as well, I'm looking at this as a move down to 126 for sort of first target areas. So that's the sort of move that I'm looking at here. We've got Great British Pound news out this morning, so after the news we'll reassess this, and if the news hasn't changed the fundamentals here on the market, which I doubt it would, then we're looking at short opportunities down to 126 as first base, and then maybe beyond from after that. So that's our sort of preference here in the trading room going into the second half of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.